let's jump into this real quickly.
What
do you think is going to happen to mortgage rates in 2023? And I'm going to throw something in there that I'd also love to have a little bit of a discussion of what you think is going to happen in 2024. Not that I have some opinions of my own, but I probably have some to share.
Well, I would say 2023, we're probably going to stay pretty close to where we are now.
Yep.
Maybe a quarter of a point up, quarter of a point down.
Okay.
But I think we're going to see a very stable interest rate environment for 2023.
Okay.
But what your listener may not realize is through the holiday season and into early January, rates got better.
Got down. They came down.
They did over a full point. So, if they were getting interest rate quotes in late fall, we need to have more conversations today because they've already come down. And now I think we're going to stay at these levels for, foreseeable future.
John Burchfield says interest rates are going to stay about where they are. So let's say 6.25% to 6.5%. Cleve says that by the end of the second quarter of 2023, that interest rates will be under 6%.
I would not be surprised.
I'm not a wagering kind of guy, and I'm not contradicting what you're saying. The reality is that the Federal Reserve is raising interest rates, and mortgage interest rates are already falling. And it's because they're starting to behave the way they're supposed to. April 15th is the day you file your tax returns, unless you're like me. You finally get them filed October the 15th once you've gotten every last little detail filed. How many people do you see waiting on their tax refund for their down payment on their house?
It's become a big trend because especially for your first-time home buyers and that range of young adults, they can have a significant refund. And that refund can absolutely be used by us, the lender, to pay closing expenses or add to the down payment and can really bridge that gap without it hurting the savings account too much.
When someone makes an application for a loan, you're typically saying, hey, give me your last 2 years W-2s.
Yep.
Give me your last 2 years pay stubs.
Yep.
Give me your last 2 months bank statements. I think you've said 222 as your rule in the past.
The rule of twos.
For me, you get a copy of my W-2, but you also ask for a copy of my tax return. So the question is for all listeners is when and why do lenders need a tax return to verify income?
Yeah. So when you're self-employed, you own the business that is generating your income. Even if you pay yourself a W-2, we're going to need to dig deeper, grab those tax returns so that we can see the health of that business. Now, a lot of times it's just 1 year of tax returns that's needed. Sometimes we need 2 years. But if you own the business or have any ownership in the business over 25%, then we're going to get into those tax returns.
If someone's been self-employed, how long should they be self-employed before they decide, hey, let me see if I can get a loan here?
Yeah. The standard's 2 years.
Okay.
But there are exceptions where it might be a little bit less than that, especially if you worked in the same exact industry and then just stepped out into yourself to open up a business doing exactly what you were doing before. It might be be able to shave some time off of that.
What are the most common mistakes you see a self-employed borrower make?
Being too aggressive with their expenses that they claim on the tax returns. Number one, you got to be careful. The IRS is out there with 87,000 new agents.
Yep.
So, you want to report legitimate expenses, but those expenses are going to hurt your buying power, how much we can use to qualify you for a loan. So if you want to buy a house, we got to think that through.